You're welcome to Business Daily on Trust TV. My name is Chamun Dabeng. Let's talk numbers. We're starting off with the market this morning. You're welcome back to the show, and once again, my name is Chamun Dabeng. Yesterday, it was on the news. The Standard Chartered Bank is closing down 50% of its West African branches to focus on strengthening its mobile banking system. After all, we are in a digital age, so if not, why not? Looking at this development, it raises quite a few questions. Will this become a chain reaction with other banks, banking facilities, following suit? Should the banks adopt this? And can the country handle a fully digitized banking system? And most of all, how will this affect employment status of thousands of Nigerians and ultimately the economy? Joining me in the studio today to search for answers to these questions is economist Dr. Tefa Abraham, and we're also going to have software engineer Habib McIver joining us in the studio today. All right, so I'm turning to you, sir. Now, what do you think about this development here with the Standard Chartered Bank? Do you think that this is something that could actually become a chain reaction where we have other banking facilities following suit?
Okay, great. First of all, Standard Chartered Bank is just one bank amongst the banking sector in Nigeria. And then what is driving this policy direction of the bank is the need to strengthen its penetration to customers, access to customers in consumer banking, using fintech, using digital banking, using payment service banks, using any other form of digital financial service product that you can use to reach out to customers. Because basically, all banks presently have a mobile app. So your phone is almost like your bank. Yeah. Hardly do people even go to bank these days to withdraw. People, by the time we fully attain cashless economy, you have people just making payments with their ATMs and transfers and mobile banking. So for the bank, it's a trade-off between should we operate physical or should we use digital. If we operate physical, you'll be raising cost of operation, hiring staff, payment of salary.
Of course.
And banks will always want to cut down cost of operations to maximize profit using mediums, outlets that will require less cost per se, if I may put it that way, but maximize what they are getting from customers. For example, all the bank charges that goes with transferring. If you use the ATM, for instance, 3 times or 6 times, there's a charge that goes with it and things like that. So for them, it is less expensive. So it's about expanding to take their product to the digital and space in terms of financial services.
All right. So speaking of customers, we actually went to the streets to talk to a few people and see what they thought about a fully digitized banking system. I asked them if they were personally ready for that development and is the country itself ready for such a system. So let's take a look at that video. London-listed lender Standard Chartered Bank has begun the process of shutting down 50% of its Western African bank locations. The bank's local unit already shut down some branches in December last year and will eventually operate only 13 branches in the West African nation, which is down from about 25 previously operated. As the world becomes more and more digitized and the need for unnecessary human interaction reduced, is the Nigerian populace ready for such a change?
We are not really prepared because of the networking system in Nigeria. So until we improve on that, because even to make calls, we find it difficult, not talk of maybe browsing or those things. And going on internet banking, you need all your servers to be readily available and be working at all times. So that is my take. Yeah.
It's a very nice one if they will get a good app for that. Because I've come across so many banks that had problem. Like I wouldn't want to mention names. I had a challenge with my bank because I tried going online to browse about them and so many, but the informations are not really good. So if they will go more to get a tangible app that anybody can afford and use, that will not be too hard for their clients, it will be very nice.
Software engineer Augustine Okorogo tells us his thoughts on the digitization of the Nigerian banking system.
For me, I would say it's a step in the right direction, given the CBN's policy and then a goal which they've been trying to achieve for some years now, which is about digital inclusion. That's including every other person, not just people around the major cities where the banks are situated. So I think it's a step in the right direction, given that we'll have a lot more people now making use of the bank and banking products and products banks has to offer. Yes, and should I say yes and yes? Given the COVID incidents of last year, I think it exposed a lot of Nigerians to a lot of possibilities. Before now, I think we always have the mindset that to complete any bank transaction, you have to walk into a bank branch to do that. But given the COVID incidents, where everybody had to do a lot of things without formal meetings, it exposed a lot of us to a lot of possibilities. And a lot of people from 2020 till today would have visited banks maybe once or twice, which would be to maybe renew their cards or do something they wouldn't be able to do offline. Given that some banks or a bank like Standard Chartered have maybe paid attention to all the other details that's based on what people walk into the bank to do and are able to provide it online. I think a lot of people would adopt it, given the ease it would give them or grant them in achieving their tasks.
At the end of 2020, only 64% of Nigerian adults were financially included. This means that 38 million adults remain completely financially excluded. However, significant strides have been made to digitize Nigeria's banking and payments landscape. A fully digitized banking system will aid in closing the gap. All right, so we have software engineer Habib McIver joining us in the studio right now. So I'm coming to you, taking a look at some of the responses from people. Of course, many people are actually ready to have a digital system where everything can be operated literally in their bedrooms. It's like, oh, I need to send mommy money. Let me just tap, tap, tap away on my phone. And it makes it that easy for you to have these transactions. But, some of the respondents were a little worried about the applications that are available. Of course, you're going to think about things like fraud. You're going to think about, network connections and all of the challenges that actually face these applications or the internet space itself. Now, as a software engineer, what do you think about a fully digitized banking system? Do you think that the country is ready for it? And are the people themselves actually ready for that change?
Well, yeah, there are challenges in every system, but in terms of being ready, I think it's a gradual process, and it's been going on so far. We have had different solutions. The fintech sector, different companies coming up and individuals coming up with different solutions, which have been addressing problems in, the financial sector in Nigeria. And I think it's been a gradual process. We saw a boom last year, a huge boom in fintech. And I think moving forward, it's about addressing challenges that people have, because there will always be challenges, So you can't have a perfect system, but you can keep addressing these solutions with time.
All right. Okay, so basically it's important to situate the need for banks to balance this need for physical branches and digital from an economic perspective. Banks are the closest fence in one industry, in the banking industry, that act as like oligopolies. And this thing that Standard Chartered Bank is doing needs to be managed on many fronts. First of all, what does it mean to close down 50% of branch? It simply means the physical branches they have in Lagos, Port Harcourt, Abuja, they will reduce. Where they have 2 branches, they will close 1, only 1 will remain. If they have 100 branches in Nigeria, they will close 50, only 50 will remain. So all other transactions that they do, transactions, transfers, payment, bill, everything will be done using banking app that customers have downloaded.
Yeah.
Now, this is the idea, and the idea is just to reduce their cost of operation and to balance their technology to labor ratio. But again, it's also important to note that aside going to deposits, most people hardly go to bank these days. And for the fact that you use Standard Chartered Bank, for instance, or any of the bank, does not mean every 100% of your money you get through that bank must be withdrawn using that banking ATM or POS. So banks a bank is like a firm well knitted in an industry. So you have somebody from Access Bank using GT POS, using Unity Bank ATM. It's just integrated. Once you have access to ATM, debit card, credit card, you have become integrated to the banking service. The only difference is how organizations and private firms pay salaries using customers' bank. Now, for the fact that your salary is paid in that bank doesn't mean that you must withdraw from that bank entirely. So the first point there is the need to communicate appropriately to consumers to understand. Otherwise, this thing might lead to panic, in panic withdrawals and panic in terms of people who are using a particular bank as their salary account wanting to change. It doesn't mean that
it doesn't
these
change
banks
anything.
Are crashing. It's just to enhance their operation efficiency, balancing the labor to capital ratio, while they are also banking on the aim for the central bank. Don't forget, central bank regulates everything happening with commercial banks, and for the CBN, the aim is one: to attain financial inclusion. People now have access to banking services, from phones to ATM to everything. So it's also important to understand that digital platform for CBN and that banks are jumping into was also how would I put it now, advertised by the central bank when they licensed MTN and Airtel to become payment service banks. So even telecom firms are also becoming part of the financial service. So the financial sector now, or a bank, can no longer be defined as a physical branch where people walk in and walk out. A bank is your telecom, it's your phone, it's your smartphone. In fact, even without smartphone, you can still do banking service using all this star, that star, 99, star 44, that. Exactly, USSD, I'm sure you guys call it, the fintech guys call it. So it's just important for customers to understand that it is banking made easy for us. So the only set of people that will have challenge are those who are slow in jumping into the tech world. Nobody's saying you must have a phone that can turn water into wine. Just a basic phone that can do USSD. Banking customers need to jump into financial literacy, digital fintech literacy, so that they know how to benefit from the banking revolution that is coming. But on the downside is that there's every likelihood of huge unemployment coming from the bank on banks. Because of when you close 50% of the branches, you are laying off people. On the other hand, workers should be ready to accept a lower pay to be able to remain in the bank. These are some
but wouldn't that depend on the position that you actually have within the bank? I mean, for the people who are sitting in front of the tellers and they're the ones that are giving out the cash, wouldn't they be the ones that would, probably be in danger of being let go?
Sorry, let me cut in here. So you see, the thing is, you can never have a perfect system that works on its own. There always has to be a human factor. So I just want to address that part where he says, people lose their job. I think job roles are now repositioned. Yeah, because at the back office, you see a lot of people right now. We go into the bank and we interface with cashiers and the rest. And this is what we see right now. They interface with people. Their positions might be, their job roles might be repositioned to be in the back office to deal with issues, because there will always be issues. They will be their customer service angle. They will always be there sorting out data and stuff. So people are not necessarily losing their jobs. Their job roles are just being repositioned. So that human element must always be there in a technological system.
I get what you're actually saying. I completely understand that there must be some sort of human element. Of course, the computer is not going to just know what it's supposed to do. There has to be someone who is imputing the data, or giving or feeding the systems what it needs to be fed in order for them to to carry out or for the system to carry out its duties. Now, the thing is, as much as we want to say that people's jobs will be repositioned, people will still lose their jobs. Because in a system where you no longer need 20 people to perform, and let's say maybe you only need 5, 15 are still going to be out of a job. And that is where the worry for a lot of people might actually be, because now you're talking about employment status. And if you remember, unemployment in Nigeria is already at 33.3% thereabout. Youth unemployment is in the 40th percentile. And having this situation, if this could actually end up becoming a chain reaction, which is very strong that it may actually be, what now happens to like I said, I asked earlier on, what happens to employment status, and how does this affect our economy at the end of the day?
Okay, generally, for economists, balancing labor and capital ratio is as old as Adam Smith. It's a topic we struggle with from undergraduate to masters to PhD. Professors today are still working on balancing labor to capital ratio. Capital in our own time is technology. So finding how to balance physical stuff with technology is a policy decision of governments, of countries. If you leave private sector firms to choose on their own the mix of capital to labor ratio, they will choose 90% capital, which is technology, 10% labor. So government has to come in to be categorical that every insurance firm, every bank, any IT firm, any telecoms operating should have a proper mix of labor to capital ratio. And by doing that, the government on its part will guarantee these private investors, because these guys are risk takers. They borrowed to invest, and if they crash, nobody will have their back. So government needs to come up to guarantee private investors that in every of the investment we do, we are guaranteeing you this level, provided you employ so number of people and you keep your employment, your technology labor mix to this ratio. These are some of the digital policies that the Ministry of Communication and Digital Economy should be working on. But as private sector firms, a very smart IT guy, if you leave him, he wants to write a program for everything, even opening his door. So you need to now give him incentive that, okay, if you employ one more lady, one more guy to at least handle your gates and handle your lights, I promise you steady electricity supply and good roads. You must give them that labor capital mix, because banks are a typical case of private sector. They are the objective function of a private firm is profit maximization. And so long as digital operation offers the least costs and minimizes the risk the least, they'll keep jumping at it. So don't forget, Standard Chartered Bank is easy for it to make this announcement because it's a UK bank with Nigerian outlet. Now, depending on how the CBN handles this move by Standard Chartered Bank, and when I mean handle, I don't mean that you can't force them not to do otherwise.
Of course.
But they have to come up with a statement like, oh, the move of banks to close 50% branch is also part of CBN's plan to expand telecoms capacity to employ more people and to join the payment service banks. However, banks should ensure that they have a proper technology to labor mix. In fact, this is one point I'm trying to emphasize. The government must come out clearly to answer this question. What is our labor capital ratio mix for tech firms? Otherwise, robots, artificial intelligence will take over everything. The way my colleague rightly said, if you launch a complaint on your banking app, somebody picks it. So it's correct. It's not everything that technology handles. But these days, you can't even tell who is answering the call on the other end. There might be a robot, an artificial intelligence. If you just answer the right questions, the program, if, then, when, and stuff like that. So it's very important to just make this point again, that what Standard Chartered Bank is doing is just part of their aim to maximize profit. But if we don't have a clear labor to capital ratio mix, it's likely to trigger fear in the banking system, panic withdrawal, people wanting to change their account. So a lot of sensitization needs to follow this move by banks to balance physical and digital mix so that it won't create unnecessary panic in the banking sector, and at the same time won't lead to fear in terms of unemployment, and at the same time banks will not start using it. Banks who are yet to jump into this space, even though their technology mix is still weak, will not start threatening staff that if you don't accept lower wage, we'll do what Standard Chartered is doing. So a lot of sensitization needs to go on with this policy. So that
but what's really stopping the banks from actually making such, a decision or making such threats to their employees?
Yeah, because already, don't forget, somehow Nigerian Labour Congress, trade unions, they have this oversight of every private sector firm, every public sector firm. So if you just put it out there that you want to lay staff off and stuff like that, you get a lot of backlash from organized unions and stuff like that. But ultimately, when it comes to banks, these are private sector. I cannot emphasize that point enough. These are private sector guys. They understand risks. Election for them is risks. Investment risk. Inflation is risks. Exchange rate risks. Weak broadband infrastructure is risks. So they factor all these things and they just take their decision. So that discussion with banks, anchored by the central bank, is very important to be able to allow banks operate at some level of equilibrium that will help them make profit, and at the same time not throw a shock into the employment board of our country.
All right, Habib.
Well, I understand what it's saying, and I agree with him. The government has to come in to regulate so many of these things. To add to what he has said, I think banks need to engage or sponsor or organize educational programs for this staff, because jobs are being repositioned right now. So in my opinion, it's best to retain staff you have. So even if you have other vacancies, you can organize training sessions for these staff to learn those skills, so that you retain them instead of laying them off and employing new ones. So I think that's a route in which Standard Chartered can look into. But like I agree with him. The government has to come into place, because just like he said, tech companies could go mad if you have that. If you have that.
Turn on the lights.
Yeah,
sweep the
you
floor,
understand. If you have that range to do what you can do, you just go ahead and do that.
He's a software engineer, so he knows.
So I understand we tech people, we are that way, but the government has to come into place, regulate these things, and say, okay, we need to have a good labor and tech ratio, just like he said. Yeah.
All right, so there are different, should I say, groups of people who may end up being affected by all of this. Now, we've talked about the people who might be living in the rural areas, who may not necessarily have access to banks and all the rest of them. Yes, this could possibly be beneficial to them, but we cannot ignore the fact that some of them can't even afford to get themselves a phone, even a small little touchlight phone that we call it, or some of them do not have a proper internet connection, or any form of network connection can be a problem. It's like when you go to visit the village, you have to turn your phone in different angles in order for you to even get a semblance of connection on your phone. And these are real issues. And it's also an issue that some of the respondents had actually brought up. And one of them actually said, sometimes you don't even have common phone network to make a call. And this is a reality. Now, what happens to these people? Because they will be affected by all of this if they do not have proper network connection. And let's also still talk about affordability. Last year, there was a report that actually showed that the number of people, or percentage of people that are actually subscribing their phones had reduced. So there is an issue of affordability. What happens to these group of people?
So great, like we established earlier, the internet infrastructure. Nigeria, we already have this infrastructure challenge, road, electricity, everything. There's internet infrastructure that is totally different. Broadband investment, all those stuff that makes internet accessible, available, and fast. That infrastructure gap in the internet space also needs to be addressed. Otherwise, as more banks even jump on this digital space, the carrying capacity of that space may be constrained. And that is why it brings back that point of the need to ensure a healthy balance of how much you take to the digital space. Very important. Now, again, if you look at, in terms of the access to financial services, the central bank has done a lot of innovation recently, like the payment service banks it authorized, all this POS money These people are everywhere these days than even ATMs. And they are even in the villages more than you think. The only challenge is that, remember, once upon a time, our grandparents, having radio was a means of hearing what government is saying. Yeah. In today's time, having at least a basic phone, what do you guys call a basic phone? This basic
feature phones.
A basic feature phone is very important for every family. So government and humanitarian affairs services, all these people doing social investment program, need to conceptualize adding those type of phones as empowerment packages. The era of giving sewing machines and grinding machines should be reduced, and ensuring that a household per village or in the village or in the communities or in the world have at least a phone. Because if you check what happens in many villages is that one person has a phone. That's the person they used to call uncle or auntie in town. Yeah. You send the money, they go to that person sees their lad, then they trek 4 kilometers, 6 kilometers to withdraw from a POS person. This is the practical reality of access to finance in the rural areas. And for the CBN, all this access to finance is measured using one talk called financial inclusion. Our financial inclusion index in Nigeria right now is still about 48%. And the central bank has a target of 80%, meaning out of 10 Nigerians, only 4 to 5% can access credit, finance very quickly and very fast. 5 are still out of it. So for the CBN to scale up that financial inclusion index, it's important to continue to innovate along access to banking, payment service banks, using POS, using non-conventional means, so that people can basically have access to credit. Credit in economics is a very important input for production and empowerment and even consumption. So that's what this whole thing is about, making sure people have access to credit.
All right, so before we go, let's our final question I'm throwing out to Habib. Now, as a software engineer, what needs to actually be put in place to ensure the safety of these transactions?
Nigerian fintech, by the way, is one of the best worldwide in terms of, in terms of security and speed, performance, all those factors put in place. So I think we are doing very well as it is. You've not heard of so much cases where there have been so many issues. But obviously there are areas of improvement, and just like I said, or just like he said earlier, government has to come into place. They have to regulate. The government has a huge role to play in this part. Currently, you see a lot of fintech vendors trying to provide same solutions. So that competition is helping already, because everybody is trying to bring the best possible product out. If I bring out a product, like he said, mobile money, and if I remember in the early days of mobile money, there was only Pagan, people started having some issues, and there were other mobile money vendors coming into play. We saw the initial vendors starting to up their game, their services, their applications started becoming better. So that is in play right now, and I think it will only get better as time goes by.
All right, thank you very much. Unfortunately, we have run out of time, but the idea of having a fully digitized banking system is actually a very tempting idea, if I must actually say. It sounds interesting because it makes life completely easy. You don't have to stress yourself to do a lot of the things that you would have had to do by, having to go into the bank, have all these conversations. Everything can now be done in the comfort of your home. So it's definitely a development that I'm sure many people want to see. All right, so we've come to the end of our show for today, and I would like to thank our guests in the studio. Thank you so much, Mr. Tefa, and thank you so much, Mr. Habib, for being a part of the show. And to our viewers out there, thank you so much for watching. Don't forget to follow us on our social media platforms. You can find us on Instagram, Facebook, and YouTube. Just look us up at Trust TV News. Well, once again, my name is Chamun Dabeng. Come back again for more Business Daily. Let's talk numbers.